Hi there everyone. Today we are doing step 3 of my 4-step proven method for profitability within salons for the beauty industry. We are going to look at salary assessments and to restructure the salary remuneration package within the salon.
Okay, perfect. You want me to give me some info about my current salary structure?
Yes, please.
Okay, excellent. So our basic salaries are between 8 and 10,000 Rand for the therapists. And then we are doing 10% commission on all treatments after they have brought in their basic salary. So say 8 or 10,000 Rand. And then when it comes to retail products, we do 5% on all retail products sold. Are there any changes that you would advise me to make?
Okay, great. So I understand your structure completely, and what we will start by doing is looking at your current salaries, but doing a proper assessment around them to see if they are healthy, and if they are unhealthy, I will then be suggesting a new structure which will actually make it healthy for the therapist to earn well, but also for the business that the salaries is in a healthy ratio as an expense.
All right.
Okay, so let's start the process. So firstly, what we're going to need is a few things that you complete on a document. Firstly, you're going to complete the total income, and we always work with ex-VAT amounts.
Okay.
So you will take your therapist, what is her total income, ex-VAT, and we will do this over a 2-year period. So we'll take 2 sessions of 12 months consecutive over the past period. That is our first one, total income, ex-VAT. The second metrics that we'll do is your retail ratio.
Okay.
So you will take, let's say for instance, this therapist sold 5,000 Rand and she brought in a total income of 32,000 Rand. These are all ex-VAT. You'll divide 5 into 32, and I know that you get 16%. So you will then say that her retail ratio to income, her retail percentage ratio is 16%. So we have completed at the top 32,000. That was the first thing we completed. Then we put in the retail ratio. The next metrics we will complete is her gross salary. So gross salary is what is at the top of the payslip before we deduct any pays you earn or UIF or anything else. So you put in a gross salary there. Let's say for instance it's 12,340, and then they'll will calculate what is her cost to company. Cost to company, where we will then take what you pay her, divided into what she's brought in for the business, and I know that that percentage is 39%. Okay. The last thing that we'll do is, you said, let's go on this scenario.
The 39% is then what she brought in, and then the outstanding 61% is what the business made, correct?
No, so let me explain it differently. So when, let's say this is her column, and we say here that she brought in 32,000 Rand. Okay. And we say that this is 100%. Okay. Then what you paid her, that gross salary, this portion is 39%. So basically, of the money that she brought in, you had to pay 39 Rand for every 100 Rand that she brought in, and the business then had 61 Rand left to pay all its other expenses of.
All right. So that is the cost to company, the 39%.
Yes.
Perfect.
Yes.
Perfect.
Okay. The last thing we're going to measure is, and in this example, I'm going to work with a basic salary of 10,000 Rand. Is we need to work out how many times her basic salary she brings in for the business. So we're going to say 32,000 Rand is what she brought in, divided by her basic salary. So she brings in 3.2 times her basic salary for the business. So this is our start, where we are assessing the salary structure and the employee. What will then happen is, for your 12-month period, you've now got 2 12-month periods, 12 months that we're measuring, 12 months that we're measuring. It's then, we're going to work on an average then, an average year and an average year, And what we're also going to do is, we're going to look at year on year, what was her growth, but I'll share a little bit about that shortly.
Perfect. And then obviously, would you mind obviously summertime is busier and in most cases wintertime is a little bit stiller. Is this 12 months from the 1st of Jan to the 1st of December, or is it for financial year?
So normally what I say to a client is just take the last 12 months,
Okay.
the most recent.
Okay.
So if we are doing this now, let's say we're 1st of May, then we take it from last year May to the end of April.
Okay, perfect.
So it doesn't have to be like from March to February.
Okay, okay.
Just the most recent.
Right. And then in
24
a
months.
case where it's a newer individual that hasn't been with the company for more than, say, 6 months?
Then normally what I say is the person that she replaced, put her data in, that
Okay.
you can just see in that column and in the business, how did it
Okay.
look?
Perfect.
And then I will use that as well.
Okay,
Because the
excellent.
more data we have, the more accurate we can be for the future.
Okay, so when it comes to salary assessment, we are focusing in a total income excluding VAT,
Yes.
a retail percentage,
Yes.
her gross salary,
Yes.
and then a cost to company.
Yes, which the document will calculate.
Mhm.
Yeah.
Obviously, a document you have created
Yes.
for your clients.
Yes.
And then, obviously, in this case, there's no documents that are included, so you're going to work it out yourself. Or
Yes.
I'm going to work it out
Yes.
myself.
Yes. That's why I sort of went through the examples. Yes.
Perfect. All right, let's move on to
And then the last
next.
one was
Yeah.
that multiplications of your basic salary. This is
Okay,
very
yes.
important.
And that is, in this case, 3.2.
Correct.
All right, perfect.
Okay. So next up, we're going to look at 4 different sections.
Yeah.
And specifically now, you've imported the data. Now we're going to see how healthy is your salary structure for a profitable business.
Okay.
So number 1, what we are looking at is the growth year on year. Remember we did 24 months, so we can compare 12 months to 12 months. So growth year on year. So with each 12-month period, we had an average what she brought in.
Yeah.
Now, let's say, for instance, her average the first 12 months was 30,000 that she brought in per month, and her average the next 12 months, the average she brought in. So this is now total income,
Yeah.
excluding VAT. So this is your treatments and your retail.
And that's monthly income as well.
Correct. Yeah. So it was the average over the 12-month first period and the second period. So she grew with 2,000 Rand
Okay.
year on year. And that you then take on the regional where she started, which was 30,000. And I've already worked it out. This is about a 6% growth that she had. Now, what you then need to ask yourself is, what was my goal for the business in your budget?
Okay.
So let's say the business aimed for 15% growth.
Okay.
Then this person is performing under what the business wants to grow. So that's the first thing we look at. The second thing that we're going to look at is your retail ratio. So retail is your smart income, and it makes you money while you're on leave and people come back for it. So when we look at retail ratio, it depends on your job description. So if you are a nail tech, your retail ratio should be 5 to 10%.
Okay.
So retail ratio means dividing your retail sales
Yeah.
into your total income.
You want to grab a different pen?
Yes. Thank you. That's much better. So in order to work out your retail ratio, you divide your retail sales into your total income.
Yes.
So in our scenario, we used 5,000 Rand divided into 32,000 Rand, and that particular person's retail ratio was 16%. Okay. Now, as I said, for nail techs, the healthy ratio is 5 to 10%. Then if you look at all-rounder, so this is now someone who does nails, skin, waxing, massage, most of the treatments, hers should be 33%.
Okay.
If we look at a hairstylist, they vary quite a bit. So hairstylist, it's going to be 20 to 40%.
Okay.
And then the last one would be an aesthetic skin therapist, and she could also be doing laser. For her, that will be 40 to 50%.
Okay.
Okay. Just for interest's sake, this third of your income is a half of your treatments for the all-rounder. Okay. So now we look at this therapist. Let's say she is an all-rounder, and her average for the past 12 months was 16%.
Yes.
So now we can see this is unhealthy. She should be doing 33%.
Yes.
Okay, so that's our first thing. So we've now seen she's underperforming in growth versus what the business wanted to grow. She is underperforming in terms of retail versus her particular job description. The next area we're going to look at is her multiplications of, no, it is the cost to company. So remember, we had the gross salary before any deductions that we divided into her total income that she brings into the business. So we take the average there. So in the scenario I gave you, let's say we said her average was 12,340, what we paid her before any deductions, and her average income, total income, was 32,000. So she costs the company 39%. Now what this means is for every 100 Rand that the business brings in, she costs the business 39 Rand. Okay. Now remember, this is pertaining to her column, only to her column. All right. When it comes to these cost to company, there are specific healthy and unhealthy ratios. Okay. Your healthy ratio, if you're sitting at a 40 to 50% that your salaries cost, and I think when you work on your P&L, you can even look there at bargaining council and all those things, then you are in big trouble. Okay, because this means for every 100 Rand that you bring in, half you're spending on salaries. Okay, you should try, as a starting point, be at 33%. Okay. But through the structure that I will explain to you, you can bring it down to 25 to 30%, and even as far down as 20 to 25%. This is massive because already here, you see she's bringing in 39%. This means that I can add 6% to my profit line. And with all of these, 5%, which is huge in our industry, because we're aiming for a 15% profit line. And one of your key areas that steals your profit is salaries. Okay. Our last thing that we're going to measure is how many times her basic salary she brings in. In our example that we had, we said that she has got a salary of 10,000, and we said her average income was 32. And when we divided 32 divided by her basic salary, we got to times 3.2. Okay. I'm just going to make a line here to explain this to you. Okay. When it comes to times basic salary, these are the rules. Times 4 is just break even. We're just paying all our bills. Okay. Times 6 is where we start showing profit. And we can actually share the profit with her. We want all therapists to do times 6 to 10. I believe that's possible, even nail techs. Okay. And then therapists that do laser and quite a lot of aesthetic skin or are just top performers, they can go as far as times 20 to times 30. And this is current therapists that I'm coaching. Yes. So this is where we look at the health of your salaries. These 4 components. Shall I repeat them for you?
We can quickly run through them. So it's going to be your percentage of growth year on year, which in this case is under. Let me grab this. 6% growth for this individual, which was, and the business growth target was 15%, so she's underperforming there.
Yes. And if I can just add there, remember in our step 1 when we spoke about budgets, we said 10% is really quite poor because all your brands and your prices go up with that. Then we said 20% is a good one and 30% is amazing. So even if you don't compare it with that and you just think of that scope, it already shows you where it's healthy or unhealthy.
So just when it comes to the business growth goals, ideally you want a 20 to a 30% growth year on year.
Initially you will, and at some point it might get lower to like 10 to 20%. You know, if you are fully booked all the time and you're not bringing in more therapists and all of that. Okay.
All right. And then next is our different percentages of what we want to bring in. So nail techs.
For retail percentage.
For retail percentage.
As a percentage of income, your retail.
Is nail techs 5 to 10, then all-rounders 33. And hairstylists is 20 to 30.
20 to 40.
20 to 40.
Yes.
And then aesthetic skin and laser therapist is going to be 40 to 50.
Yes.
All right. And then following on that is your cost per company.
Cost to company.
Which we want a bottom line, so a good foundation is 33%.
Yes.
And then we want to progress to 25 to 30, and then
Yes.
ideally around 20 to 25.
Yes.
And then lastly, it comes to the how many times of basic salary we grow, and then
she is bringing in.
Yeah, she's bringing in. So 4 times is break even.
Yeah.
So if a therapist is not bringing in 4 times her basic salary, she is losing me money instead of making my salon money, correct?
Yeah, yes, it's better than not to have it in the business.
Okay. And then when it comes to 6 times, 5 to 6 times, we are profitable. 6 to 10 times is what we're in the range we want to be.
Yes.
And then obviously for aesthetic skin and laser therapists, a 20 to 30 is
possible.
achievable.
Yes. Yeah.
Okay.
Great. Let's just pause for a second. You are clearly invested in making changes in your business to ensure profitability. We are 15 minutes into this video, 15 minutes that you will never get back. My question is, how much more time can you afford to spend trying to figure it out all on your own? After implementing all 4 steps of my proven method, the change you desire will come, but it won't be easy. It will take much longer when you do it all by yourself. Book a discovery call so that we can get started and I can guide you through this process. If you are not ready yet, continue watching and implement these steps so that you can start moving in the right direction. When you are ready, let me know so that I can simplify and speed up the process for you. Our third section that we're going to look at here is now the structure that I am recommending.
Okay.
It is my proven salary structure, and it works phenomenally.
Okay.
We basically now, it's almost a framework that is created for the therapist to function within, and it's foolproof. She then goes for those levels because it's going to make her money, and those levels protect your business, that you break even and that you're always in the profit region.
Okay. And then where did you get the salary structure from? Did somebody teach it to you? So it's just from experience? Where did it come from?
Yeah, it's from experience. I love numbers and playing around with numbers, and through experience I've seen this is the different levels that you need to get at.
Okay, so they don't teach that at some type of institution?
No.
Okay, perfect.
Yeah. All right.
And so as far as you are aware, is there anybody else outside of your clients that are using the salary structure?
No.
No, okay, perfect.
So commission. I mentioned that you have to bring in 4 times your basic salary in order to break even.
Yes.
So we're going to link it into your commission. So we are saying to all of the therapists, what we are doing is, because your structure currently is giving you 10% on treatments and 5% on retail.
Yeah.
Now what we do in my structure is we put them together.
Okay.
So all the targets are retail and treatments together.
Combined, okay.
Yeah. The reason for that is in a bad month where you don't have a lot of clients, you can try and make it up in retail.
Okay, yeah.
And when you do great retail or whatever, so you can play around with it just to make it easier for them to get their targets. Okay. So we say that they have to bring in 4 times their basic salary, and then from Rand 1, they will get 10% commission.
Okay. So let's say in our case, the basic salary is 10,000 Rand.
Yes.
Right? So when the therapist brings in 40,000.
Correct.
Then she gets not from 40,000 going on, but from then, so she gets 10% on the 40,000. So when she reaches 40,000, she gets that 10% commission, which is 4,000 Rand.
But if she brings in 39,000 Rand, she gets no commission.
Okay.
So I often find that people sit on their basic salaries, or by 30,000, they feel, that's enough money for them. And then you're unprofitable in your business. So now it forces them to go to that level.
So they have to break even. And
correct.
That's the incentivize.
Yes. So at 40,000, she then is able to start earning 4,000 Rand commission. Remember, all the amounts that we work with is excluding VAT, and all the amounts is the retail and the treatments combined.
Okay.
After that, our next one, as I mentioned to you, we start making profit at times 6, and we can start sharing that profit. Our next section that we will be unpacking is the incentive, the monthly incentive.
Okay, perfect.
A monthly incentive links to our ×6 and higher levels,
Okay.
where we make profit and we can share more. So we will build a climb the ladder structure for her, where we say ×6 your basics, ×7. I normally do 5 levels. And so then it's going to be 60,000 and 70,000, and so it carries on.
Okay. Why don't we include 5 times the basic salary?
Because you don't make profit there.
Okay, so you only make profit from 6 and up.
Correct.
Okay.
Yeah.
So 4 is break even, and when 5, basically it balances out. The commission that you give takes that profit away. Do I understand correctly?
So I didn't unpack it now because it gets a bit complicated, but if you do the percentage that someone costs you, it's only around about 6 times where you get to that 33%.
Okay.
Where it's more healthy, where we can start sharing.
Okay.
Yes.
Right.
Okay. So there's a transition period between ×4 and ×6.
Okay. Okay. Perfect.
Otherwise, you're going to run into a problem. You're giving too much.
Okay.
Yes.
No problem.
So what we do here is you're going to give an incentive, and I normally recommend a 1% incentive.
Okay.
It is a fixed amount. So with your commission, it was a percentage.
Yes.
It will always be a ratio of what you bring in. Here it's a fixed amount, and it's per level.
Okay.
And you have to progress on to the next level to unlock the next incentive. So here it will be 600 Rand, 700 Rand, and so it carries on.
Okay.
Now, if I bring in 59,000, I get nothing.
Mm-hmm.
If I bring in 60, I get 600 Rand.
That's not there as well.
If I bring in 65,000 Rand, I still get 600.
Okay.
I first have to do 70 or higher in order to get the next amount.
Okay.
So obviously they're going to push on to 70 because they want more.
Yeah. And tell me, in the difference in the salary, is it going to be, so unlock 60, you get 600, then you unlock 70, now it's 600, the 600 plus for 700.
No, only that.
Okay.
Yeah. So to give you an example, let's say she does 71,000 Rand.
Mm-hmm.
Okay. Then she's going to get her 10,000 Rand basic salary.
Yeah.
She will get 10% on that, so that's 7,100 Rand commission. And then she will get an incentive of 700 Rand.
Mm-hmm.
So for that particular month, her gross will be 17,800 Rand.
Okay, perfect. Do you want to, is it possible if we can quickly work out what that is compared to, say, my previous salary structure?
We can, yeah. Now, normally when I get into a business, they're not operating these levels. They are doing way less, and it's a frustration for the business and for the therapist.
Yeah.
And these levels, and I'll get into the bonus after this, pulls them up because they want to earn
incentivizes.
more. And that's the more they earn, and you're doing this correct structure, the less they cost you. Okay, so 32,000. Then on your structure, it'll be 10K. We quickly spit out 32, 16% of that. So she would then do retail 5120, and her 5% on that is 256, and then the difference is 26880 minus the 10, so she gets commission on 16,880, so that's 1688, correct?
I don't do your calculations, you did.
Okay, so that's fine. So it's 10 basic, this is her 16%, she gets 5% on that, that's her retail split. So she gets 256, that's her retail commission, and then after we took the basic salary off the difference, her treatment side, her 10% is 1688. So there, that's 14. That's also 14. That's 9. So that's what she'll earn on your structure.
Okay.
With my structure, remember, she has to bring in 4 times.
So she'll only earn 10.
Get a basic, so she'll earn 10. So what I'm trying to show you, and you can see it very clearly, is they will not want to operate here because they don't earn well. They want to push up here because currently, the higher they go, they get less with your structure. and they get more the lower they are. With
Yeah.
my structure, the lower they are, it hurts. The higher they goes, they actually make money.
Exactly. Yeah.
Yeah.
So they are better incentivized when they are making the company money, my
Yes.
salon money,
Yes.
and they are worse off when they are under 4 and
Yes.
under 5. So ideally, above 6 times on this ladder is where they want to be, because that's where they are making money.
Yes, and that's where they're going to get the incentive as well as the bonus that I'll explain now.
So it's healthier for me and better for the therapist. So she's going to be more motivated
Yes.
to do 6 times the basic salary instead of the current 3.2 times,
Yes.
because she's not making any money, any good money,
Yes.
up until she really brings in 6 times.
Yes.
And when it comes to 4 times, under 4 times, there's no commission.
And the other thing is, the busier you are, the more motivated you are, the more productive is your
Obviously,
day. The
yeah.
more you see results with clients, the more you get referrals, the more you have retail
Yeah,
opportunity.
so it's an ongoing,
The one looks after the other.
it's an upward spiral.
Exactly.
Okay.
Our next and third one with my proven structure for salaries is the quarterly bonus.
Okay.
So the quarterly bonus, I recommend that you run with a financial year.
Okay.
My ideal is that 1st of March you put all your salaries up, you start your new prices then with your brands and with your treatments, and your financial year with your budget starts there.
Okay.
So we work in quarters. A quarter is 3 months. Okay. So we will then work from March, April, May.
And this is now instead of my current end of year bonus.
Yeah, so it's a good point that you're making. What I saw with a lot of my clients is that they were giving their therapists and their staff a bonus at the end of the year.
Yeah.
This put a lot of pressure on them because in January you have really bad cash flow. Some of them close, they're really quiet.
Yeah, especially over
They
Christmas
spent
time.
a lot of stock and things. So now they're giving bonuses. They going into a cash flow problem in January. This puts a lot of strain on the owner. She's already worked hard the whole year.
And then with tax season coming up end of Feb as well.
Exactly. Yeah. The other factor was that the staff didn't appreciate it.
Yeah.
I had many owners that said they didn't even thank them. And then besides that, they said it's too little. They want more.
Yeah.
Plus there was staff that was not profitable, like our example here,
Yeah.
3.2, who got the same as someone who made times 6.
Yeah.
So you were rewarding people for not being profitable and making them entitled.
Yeah.
So this is the solution that we came up with to take pressure off the business, but also for the therapist to be empowered all year round and not only to wait for December. Our quarters
And then
run.
obviously,
yeah.
going to break or interrupt you.
Yeah.
Obviously, a therapist knows she's going to get a bonus at the end of the year. So December month, which should be your best month to bringing in more for a therapist to perform the best, because everybody's going on vacation. They're making sure their skin and their nails and their hair and everything is done with the laser hair removal as well. Everything is done before the Christmas and the festive season, as they say. But now the therapists are laid back because they know they're getting their bonus anyways. It's not going to be a problem. They won't have a shortage of spending money.
So it can make them lazy, for sure. Yes. Our quarters then run March, April, May. So that's your first quarter. Then it's June, July, August. And actually, if you think about it, this is autumn, this is winter. So if they also work with their clients in quarters, it aligns quite nicely. Then your spring, which is September, October, November. And then your summer, which is December to February.
Yeah.
What I always recommend with a bonus is that we run it from the 1st of March to the 31st of May, but you only pay them end of June, just to give you a little bit of cash flow. What really is then nice, your third quarter is then paid in December, which is almost like a Christmas bonus for them.
And then the June to August period will be paid in the beginning of October.
End of September.
End of September, okay,
yes,
it's more or less the same.
And then the summer, December to February, will be paid end of February. End of March, sorry.
End of March,
yes. Okay. So these are your quarters, number one. How this then works is, in our example, we set times 6 is 60,000 on the 10,000 basic.
Yeah.
Now we have 3 months. So obviously we have to take this total and times it by 3. So we take 60 times 3. So your first or your times 6 level is 180,000. And then your next level times 7, which is 70,000, times 3 is then 210.
Okay.
And so you carry on with those levels, those 5 levels, okay? We say now, in this period, you must bring in 180 in XVAT, in treatments and retail.
Okay.
Now, it doesn't have to be a minimum of 60 each month.
Yeah.
You can go do 50 here and miss your monthly incentive. And then this month you could do 60. And then this month you could do 70, so that you eventually get to 180. And this is the beauty of the bonus. So what therapists often do is 1 month they won't make target, and they just like write it off and carry on. They don't catch it up, and your business doesn't catch it up. But now they are doing your job for you. They're catching up lost income in a short period, 3 months, so that they can still make their bonus.
And if they don't generate, so in this case, with the 10,000 Rand basic, if they're not doing 180 or more, they are not getting that quarter's bonus.
Correct.
Okay, perfect.
The same as with the incentives, you now have different levels that unlocks, and it's a fixed amount. Now, what I do with the bonus is we gave 1% for the monthly incentive. For the bonuses, we give 1.5%.
Okay.
So if we then have to calculate 180,000, I think it's 2,700. Let's just double check. 180,000 times
1.5%.
Yeah. So for this, her bonus will be 2,700, which is a good chunker. If you think on this level, she got 600 Rand per month. And you can see it's more than 3 times the incentive, 1.8. Yeah. So I must say the amazing thing with this, I even work with nail techs. They will push her. So don't think only your aesthetic therapists or your all-rounders will go for this. Your nail techs, all of them will go for it. And as soon as they start making these bonuses, they see the benefit, because we all have a car that breaks, children that have to start school in its new uniforms, a holiday we want to go on, gifting for Christmas, all those things, or just savings that we want to save because we can't save off our monthly. So that is then your different levels. It's worked on 1.5%. And let's take an example then. So we are about 10. So let's say, for instance, then she did bring in 60K per month, and she did make the 180 per quarter. Okay. So now she gets a basic of 10 on the 60,000 that particular month. Let's say the last month, she does make her 6,000 Rand commission. Then she gets her 600 Rand for incentive, and then she gets her 2,700 Rand. So now we're sitting here that her salary for this particular month is
6 plus 600 is 16 plus 2.
Is that right? Yeah, I think so. 19,300.
So 16,600 plus 2,000 is 18,600. Yeah, that's correct.
Okay. So in her bonus month, she did that, and we said in her month where she only made, that was the 70. Let's do, if she didn't make that, we said she would do 16,600. You can see there's a nice jump there. Yeah. What I do want to show is in this particular month, what she will cost you. So the month that she only does an incentive, she's going to cost the business, I think it's 28%. So that divided by 60,000, she is costing you 28%. And when she does make her bonus month, she costs you 32%. And I did work out over a quarter period. She's going to cost you about 29%. And you remember I said you want to start at 30 to 33, and then you're able to go down to 25 to 30. Now the higher she'll climb up to times 9, times 10, whatever, you're going to go to 25% and lower.
Perfect.
Before we are done, I would like to talk through a recent all-rounder therapist that I implemented my proven method and the changes we've seen in only 5 months.
Okay, so the salary structure, and after you went basically through all those steps and implemented into that particular client's salon, and then this is one specific all-rounder therapist that you saw some significant change in.
Yes.
Okay, excellent.
So let's say her name is Susan.
Mm-hmm.
So Susan, as I mentioned, she is an all-rounder.
Okay, obviously we can't say a real name because of the Property Act.
Yes.
Mm-hmm.
And she has got a basic of 8.5, so very similar to your staff,
Yeah.
8,500. And when I started with her October last year, the average income that she was bringing in per month was about 42,500 Rand.
Okay.
Okay. And her retail ratio that she was doing was 16%.
Okay.
And for the business, she was bringing in about 5 times her basic salary.
Okay.
So you can see here, we already, like in my other example, had a challenge where she was not in the profitable section and she was not doing the 33% that we really want her in.
Yeah.
So we only implemented the structure exactly like I explained it to you, and within 5 months we saw these changes.
Okay.
So we have now seen that her average income over the last 5 months has gone from 42,500 Rand to 66,165. And this is an increase in average income. So this is not in her best month, this is the average between the 5 months. It's an increase of 56%.
Okay.
Yeah, this particular client in the first month, her accountant phoned her and said, what happened? Because she couldn't believe the growth.
Yeah.
And this is in a coastal town, we're not talking in a main city.
Yeah.
So it's possible for anyone. And then the other big stat on her basic is that she went from ×5 to, if you round it off, ×8, her basic salary. So she is currently earning incentives and bonuses and commission, and the owner is actually making good profit. And this particular owner has actually bought a new property and she's moving her salon, so she's growing. Yes.
Excellent, expanding the salon. And then retail percentage, how did she grow in her retail percentage?
So her retail percentage, she grew from a massive 16%, she grew to 36%.
Okay.
And remember I said we want an all-rounder at 33 and up. So she is already starting to achieve that.
16, which was quite horrible, in your opinion.
Yes. Yeah.
So 36, which is a healthy in range.
Very good.
This is all in 5 months.
5 months.
Excellent. Thank you.
Pleasure.
All right.